Welcome to this special video session. Today we are looking at probably one of the most talked about reversal signals, the engulfing bar. However, there are some traps associated with this essentially three-bar move, and we'll look at when a reversal isn't a reversal, and of course, try to put you in a good place where you may create a higher probability setup. Let's just kick off by just talking about the purpose of this session. And really, we're going to discuss the potential for an engulfing bar trap and, of course, how you would avoid it. Because these engulfing bars look like powerful signals, but without context, they can be just noise. So, how do we get that context right? We're also going to be discussing the differences and attributes of what may be the ideal setup so that you can put yourself in a place where you've got something to take to the market and test for yourself. The key point with this is, as with any entry setup, our aim, what we're trying to do is not only find the primary price action on a chart, but we're looking for confluence from other factors that gives us the chance of creating a higher probability entry. So let's start by looking at what this engulfing pattern looks like. And here's the bullish version. So we've got a potential reversal pattern that's formed at the end of a trend. So in this case, we've got a previous down move, and you can see there we've got 2 or 3 candles involved in that last leg of that downwards move. And then we have this bullish candle here, whose body engulfs the body of this last bearish candle. What this does is it suggests a change in control. And ideally, what we should be doing is waiting for the confirmation of the next candle, as with any candlestick pattern. Of course, it's the reverse for a short trade in that we would have an uptrend and then that engulfing bearish candle, which would open and close either side of the previous candle body to the downside, and then look for that confirmation beneath that. So, that being grasped, probably the first stage is to go and have a look at a few of these on a chart. That's your first move. So look at points at which the market reverses and see if you can find some of these engulfing chart patterns. Because by doing this, you're going to be able to make sense or more sense of what we're going to be talking about here when we look at the mistakes people make, and also, of course, how to stack the odds potentially in your favor. So there are 3 key reasons for failure or putting yourself in a position where you might be entering an engulfing trap. The first key reason is that traders enter blindly on candle close. So we've said before that one of the things that's important with any candle pattern is to get confirmation from the subsequent candle that that is a reversal. To do that before the end of that next candle close is essentially trading a little blindly. You haven't got full context. You haven't got confirmation of that reversal. And of course, added to that, there's potentially ignoring surrounding conditions. What's happening not only in the immediate preceding candles, but those that had happened prior to that. We may see engulfing candles many times in choppy, non-trending zones. And of course, they are unlikely to create a move which is going to yield a reasonable outcome for you as a trader. So we want to avoid those as well. So those are the 3 key reasons why people who don't consider things fully, who don't have a written trading plan that's based on those 2 key principles of not only the initial price action, but also looking for factors which offer some confluence. So this is the trap. Traders treat the engulfing candle as a green light, regardless of where it forms or what came before it. You need to do better than that. And hopefully some of the things you'll hear in this video will either be a nice checklist for you if you've been looking at this already, or something to go and check out for yourself for the first time. Context is everything. There are 3 context filters we must use when we're looking at an engulfing candle system. And we're going to cover these one by one in a few moments. But just to give you the three, we want to look at the trend condition. We want to look at support and resistance lines, or perhaps even range extremes. And finally, volume and candle structure. All three of these must be looked at. It's no good just looking at one, just to reinforce that key point. And a powerful signal in the wrong context is just noise. So once again, to reiterate, applying the three essential filters that we're going to talk about subsequently that make or break this pattern is absolutely critical for you as a trader if you're wanting to achieve successful outcomes. So let's look at the first filter, and that's trend condition. Now, what we're trying to do here is match the strategy to the state of the trend. The ideal setup is exhaustion after an extended trend. We often would look for 2 bars or maybe even 3 bars consecutively prior to the reversal. Many would suggest this is one of the attributes of a high probability entry. As previously stated, but worth reinforcing nevertheless, we confirm only on the close of the subsequent bar, not the first tick or the first few ticks, but the confirmation of the subsequent bar on your primary time frame, i.e. the time frame that you're actually entering the trade on. We could do things like use a short-term moving average price cross or potential MACD signal line crossing the histogram to add to that reversal confirmation. So for example, if we're looking at a engulfing pattern that created a short entry, what we might do is not only wait for that confirmation candle after the previous engulfing candle, but want it to cross, let's say, a 7 EMA. If you are going to use a moving average, it's always better to use the EMA because of its weighting, is more responsive to trend. We'll show you an example of that in a moment. The second filter is looking at range extremes or key levels, because we know that macro price action, i.e. the big picture that you see in a full chart, often creates subsequent price action. So for example, if we have a resistance 100 bars back, 150 bars back, then there's a fair chance that once it hits that price level again, it may well pause and reverse. So we look for confluence with recent highs or lows, perhaps multi-time frame confirmation, looking at a longer time frame than we're actually trading on our primary. So for example, if trading a half-hour chart, we might look at a 4-hour chart or even a daily chart to say, hey, look, we've got that same potential reversal point on longer time frames as well. That obviously adds weight to the potential for it to move. We can look at support resistance line, obviously, and then other things like zigzags or fractals for potential turn points. If we see engulfing bars in the middle of the range, rather than looking for a potential trend that's exhausting, this is likely to be noise and merely just a pullback. And there's other strategies we can use to trade that, but it wouldn't be using an engulfing bar per se in this context. We can also look at pivot zones, prior wicks, fib retracements, any of these, along with those we've covered already, would give you better odds in price moving in your desired direction. So having covered chart picture itself, we may find that time of day may impact on the likelihood of a significant move. If volatility is low, for example, the chances of a significant move, perhaps at the back end of the Asian session, or maybe even towards the back end of the US session, we may see less opportunity for a move that may continue. We also, of course, need to watch for economic data. So both those things may form part of your trading plan in terms of how you're going to manage those particular situations. In all of this, what you've got to do is ask yourself, is this a meaningful price level or potentially just another point on a chart? At the extremes of trends, at those points at which there may be a pause or even a reversal, that's when this particular strategy may become interesting. Our third filter is looking right at the heart of the action. It's looking at volume and candle quality on the micro level at the point at which that engulfing candle occurs. So looking at high volume, as we've spoken about many times before and on other videos, is a sign of trader commitment to a potential move in either direction. There's no reason why this shouldn't be part of this strategy also. Generally speaking, the engulfing candle is a long candle body. We often find that small wicks associated with that would give a stronger candle picture. We're not only comparing the close to the recent bar, for example, a lower close than the engulfing candle bar on that confirmation, but closing price in respect of the bar range. So if we're trading a long position, we might look for a close in the top half of the bar or the bottom half if going short. All of these are suggestive of increasing control, a change from the bears to the bulls or the bulls to the bears. So remember, we're looking at trend condition, support resistance or range extremes, and volume and candle structure. So if we look at this chart, you can see at point A, there's our engulfing candle, only just above the body of the previous one, but nevertheless looks significant. And you can see that this is around a level that was previously challenged, that potential support, that potential resistance line, which is resulting in this potential exhaustion of this uptrend with those two consecutive candles we see at E and subsequent reverse with the engulfing candle. We see our confirmation on bar C, and if we look down here at D, you can see that increase in volume also. So this chart encompasses the factors that we've just talked about throughout this video, and I hope that helps in terms of not only giving you a visual representation, but also reinforcing some of the points so that you can start to write a trading system around this. One last thing, of course, is that you don't forget exits. One of the nice things about an engulfing candle is we've got a natural stop. If we look here at this reversal to the downside, it would make sense to have a stop above that reversal point. From a risk management point of view, we may choose to trail a stop at this point here, which again could be a pause point on the way down. We actually saw that it came down, retraced that level before continuing its way down further. A first trail point would often be the bottom of the engulfing candle itself once it starts to move in your direction. And of course, after that, it's up to you. Note also this blue line here that you see on the chart. This is actually the 7 EMA, and you can see that that engulfing candle crossed through that. That's our final tick. So there you go. Avoid those common mistakes that we talked about right at the beginning and use these three context filters to enable you to create a higher probability engulfing candle trade. So consider the content in this session. How can this contribute to your trading? Does it offer you a checklist if you're doing this already? Or does it enable you to create a trading plan that might lead to something that may prove to be successful over time? Of course, as with any new strategy, test it out in the market on very small volumes before you choose to scale. And of course, evaluate it continuously. I hope that's been interesting and useful, giving you some things to have a think about, and we'll see you again soon. Trade safe and see you again soon. Bye bye for now.